Please turn your sound on to hear full explanations of our answers. Thank you. The question is, how does Forex leverage work? And the answer I have for that is that it's like, think of it as like a huge loan. And very important, as I'm going to just really explain to you, is that you must manage your risk. Now, Forex leverage is also known as margin. It's like a huge loan. It's you know, you can, let's say that you can always, when you top up your balance on your Forex account, obviously depending on the size of your account, there's only so much that you can trade. It depends on how your broker works, but typically you'll be able to trade certain lot sizes. Okay, so for example, what you have in your account, it may allow you to buy into a position, you know, buy or sell or whatever, but to have a position in the market where every time the market goes up by a pip, you make let's say $10. Okay, so if the market goes up by 10 pips and you accurately profited on those 10 pips, then you'll make $10. Of course, if the market goes against you, you know, you can lose those same amounts. Now the thing is, what if you want to make more money? Then you've got to put up more capital, you know, you have to have more in your account. But what if you just don't have that money? Then your broker can lend it to you, and it's not like he's going to lend you a little bit. He can literally multiply your position. So instead of making $10 a pip, you can make even $100 a pip. That's 10 to 1 margin, which sounds kind of insane. But the thing is, that sounds great, right? But if you know, don't forget, it can also go against you, the market, and you can lose 10 times as much as well. You can lose $10 a pip. So a lot of people get caught out by this. What happens with margin as well is, if you have a position that's losing money, before you start to lose a lot of money, your broker will make margin calls on you and say, hey, look buddy, you need to top up the amount in your account, top up the equity in your account. And this is so they're protected, because, you know, it's not good for a broker to have a lot of losing positions on his books, and then when a whole bunch of people you know, literally end up in huge debt and can't recover, then he's going to have to go clawing back those debts. So all brokers, it's not just brokers, even exchanges, when it comes to like derivatives, you know, on a huge scale, they will also do the same thing. They will issue margin calls. Now, when I say you must manage your risk, you know, because leverage is great, although I don't recommend it when you're starting out. Do not go near leverage if you're just starting out. And you know, you only want to lose as much as you can afford, and that means however much you put in your account. So that means don't take out leverage if you're just a beginner. But later on, and actually this applies whether you're using leverage or not, you need to have appropriate risk management. That means setting stop losses as a minimum. That means not having, you know, not putting too much on each position. But a stop loss, by the way, in case you don't know, it's when the market goes against you, then a stop loss will get activated. For example, if it goes like 3% against you or 5% against you, it's a moment where you've issued an instruction to say, at this point I'm going to admit failure, I'm going to accept a small acceptable level of loss, and I'm just going to close my position, and I'm going to call it a day, and, you know, I'll admit that I'm wrong, and I'll take this small loss that goes against me. What you don't want to do is start having huge losses and trying to bet even more next time to make those back up, you know. And with leverage, you can't do that anyway. You'll get in severe trouble if you do that. You've got to have good risk management. You've got to have tight, you know, you've got to have appropriate stops, and be vigilant with them, and exercise them properly. So that's how leverage works. It's basically like a huge loan. I'd say if you're a beginner, stay well away from it. Later on, as you become a more profitable, consistent trader, definitely look into it, because it's going to allow you to make more money quickly. You know, you can have a few days worth of trading, and instead of making like a total of 20% or something, you know, you could be up 200 or 300%. It makes a huge difference, and these things compound as well. You know, if you string a series of wins together, then it'll be so much more than the sum of its parts had you not taken out that leverage. So that's how it works. Listen, before I go, I just want to recommend to you, if you look down, I'll put a link in the description box below. If you click on that link, it'll take you to a site that's been created by one of the best traders around, this guy called Vladimir. And he's helped a lot of guys, especially guys who have not yet turned profitable and consistent, and even those guys who have lost it all more than once, brought them back from the brink. He has an amazing hybrid system that is adaptable and can work for anybody. And if you use this, then you can become profitable and consistent in your profits very quickly. And from then on, you can, because it allows you to be a logical trader and to strip out your emotions from your trading and to use good rationale in your trading decisions. And after that, the sky's the limit, and you can really start tweaking your own system to your own needs. But Vladimir will get you in that position in the first place. That's the great thing about his site, and I thoroughly recommend it to everybody who's learning Forex that I come across. So please just click the link down there. You won't regret it. You're going to be blown away by it, actually. I guarantee that. Have a look, and I'll see you soon in my next video. Take care.